Firstly, we will acquire some theory, some basic concepts, some definitions, because we have to know what we talk about. If I say principle, or I say interest, you must know what it means, because finance does not give space for suspicions or some thoughts. It's quite a science where things are very well defined. So, after we acquire some theory, we will be acquainted with some examples. I will give you an example. How is it calculated? What's important in this calculation? Some context, right? And then we will talk about some practical context. When we use this, does it have any advantage or disadvantage? How in general it looks like. It's very important to know when a certain formula or certain technique has an advantage and in which situation it's not the best. Maybe something else should be used. And then finally we will come to some practical usage with the examples. I try to find the examples that are really from the tourism industry. So say that we will try to do it as practical, as useful for your future professional development as possible. Let's imagine the company, right? I presume that at the moment you don't have any company. Possibly your family, your parents, maybe your friends, somebody has the company. But even the largest corporations, they begin as very small businesses. Now we tend to call these small beginners businesses, we call them startups. This is like a fancy name for that. But it really how it is, that at the beginning there is some kind of idea, then the idea develops, and then you need money. You certainly need money to develop the idea, because even if it's the best idea in the world, when you do not have money, then it's very difficult to develop it. As well, you might have money, but you place it in a wrong way, then again it's not a good thing, because you will lose this initial money instead of multiplying this money, making it more and more and more. So it's very important to judge what the company at the given moment needs, what kind of money it needs, what kind of investment, what kind of improvement it needs. Then it's very important to judge in the future at what stage of the development the company is, because then probably it will need different money for something different. Maybe more expanding and more working capital for the capacity, or another place of business, or maybe some kind of neighboring business to develop, or more marketing, or who knows. So you need to identify the financial need of the company, and then to adapt your financial decisions to the needs of this company in development. How travel and tourism industry differs from other industries? It's an interesting question, how it differs, because we have to find what it's all about. Probably you might be better specialist on tourism industry than I am, but then as well I have some knowledge about that. So what's the core of tourism industry. The core of this industry is this act of traveling, right? The act of traveling at different locations for business, holidays, pleasure, family, entertainment, whatever. But it, as a specific definition, the person has to be in a different place for at least 24 hours, but not longer than a year. I mean, not shorter, because definitely it's not a tourism, it's like a short visit for something. Not longer, because it's a resettlement. Somebody decides to live in a different place. So, this is tourism, and as such, it as well incorporates a necessity for overnight accommodation. This is very important. Somebody stays overnight in a place, eats in this place, does some other things. So, as per definition, that it's a trip, journey, travel, that it's to visit and come back, it has to be a round trip. Somebody goes and somebody returns. So it's not like one direction. So there is a whole bunch of services that are around tourism. It's like staying overnight, feeding a person, getting to know the location, many things. Then there is the travel industry. It's sort of close, but as well has some differences. It's like an act of moving from one location to another. It's just linked with moving. So anything that moves a person from her home to some other place, it's a travel. So actually it could be one way, it could be a round trip, it's a variety of purposes. Mainly it concentrates on this crucial concept of moving from one place to another. So it's sort of wider from like staying overnight, but in a sense it's close to moving from one place to another. Okay, now let's imagine, because possibly in future we will try to use these examples in our work, what kind of companies, sectors and companies are there in travel and tourism industry. So firstly, anything related to transportation, airline industry, car rental, water transport, coach services, railways, anything that serves a person to move from one place to another. So the issues related with finance are sort of pretty straightforward. The most likely the company will have to buy an airplane and just judge if it's rentable or not, how many years it will work till it's paid back, or make some kind of gain for the company, for example. Or if we are in car rental industry, how many cars, what size of the cars, how well equipped we should buy to offer to our clients, how much we should give to the marketing, many issues, right? So this is transportation. The next one will be anything related to accommodation. And it's pretty important, because the thing that normally with staying overnight is related, it costs a lot to build a hotel or to build a motel. Therefore, it's very cost consuming generally. So all hotels, shared accommodations, hostels, campings, bed and breakfast, cruises, farmhouse accommodation, agritourism, timeshare accommodation, any kind that people stay overnight. And then as well, when you invest in a hotel, you just think, how much time do I need till it's paid back? This is a fundamental question. We'll touch it soon in a concept of payback. Then we have the third very big area of travel and tourism, and it's related to food and beverage. All restaurants, caterings, bars, cafes, nightclubs. Because when somebody stays in a place, this person has to eat. And after this person eats, the most likely the person would like to entertain, to go somewhere. Obviously, firstly, like to eat, and then to be accompanied by something else like bars, cafes, nightclubs. But then next step is entertainment. Exactly. Entertainment. Casinos, tourist informations, shopping, tourist guides and tours. I have put a picture on the previous one. I put a picture of Las Vegas, and this is the picture of Hong Kong that I visited quite recently. And I still cannot imagine how on earth it's possible that this destination is so on the top of all tourist lists. Because, as a matter of fact, there is nothing interesting to see in Hong Kong. Sorry for Hong Kong people, but this is the truth. There is nothing interesting, not a single building. Just maybe that's the view on the island, but it's just the view. There are so many different views elsewhere. And when I talked to Chinese persons that I met there, they say they come to Hong Kong to do shopping. I was stunned. I said, what do you buy? And they say everything. Jewelry, watches, home equipment, everything. Because of taxes, apparently it's sort of cheaper than China. I don't know. I don't want to touch the subject. But then shopping, it's quite an essential part of travel and tourism industry. I mean, in Paris, it is gigantic. The tourists from Asia buy clothes in an amazing quantity. But then it's not the end, because there are still some connected industries, like travel agents that do everything, tour operators, online travel agencies, tourism organizations, anybody that sort of develops the concept of tourism. And all these industries that I quoted, all of them, they need money to develop, to work, to gain some money, to finance many things. So this is an important factor, that every company needs money, and somebody has to manage this financial aspect. And now we are coming to the subject. Like, every company needs money. That's for sure. Every company needs money. And what are the sources of money? So generally it's money from the investors. There are some people first that pay in, they create the company. Then when the company grows, it's very important to understand that it needs some more money. And it might happen that investors would put some more money into the company as well, which is very common. There are some reinvested earnings or reinvested profits, because hopefully the company grows, and when the company grows, it means it produces profit, and then this profit could be retained in the company for future development. Obviously, somebody would ask me, hello, Professor, what about the loan? Okay, loan is very important, but loan is something to be paid back at certain time. When I mean the company needs money, needs own money, like it's there, the capital is there. So it comes from the investors or the profit that is worked out and retained in the company. Then, when we already know that every company needs money, the natural step would be every company needs some financial management. It is very important. It is very important because there's quite a number of very simple questions that you might put into the scope of thinking of financial manager. And how we could pay the current costs. I'm not stepping into financial accounting because I presume you have other specialists to teach about that. But current costs like wages or rent for the space or electricity bill, and how we pay. Do we have enough money in our running company to pay for that? I mean, we are in a hotel, right? So we have to pay the receptionist. Do we have money? Or we have the hotel and we need some electricity or internet supplier. Do we need money? Yes. How we could pay? Are we able to pay? This is the very important factor. Then, for example, how we plan the investments. I mean investments in very, very broad aspect. Like we have this hotel and we have the roof. Say, we know that the roof is not in a very good state. It's still not leaking, but it may leak if the winter is harsh. In Italian, winter could be harsh. Then possibly we should repair this. So how we plan? Do we have enough money to repair the roof? And say that we need to repay something to reconstruct. And how should finance? Should we ask our owners or us, put some more money? Or should we ask that the profit is entirely retained in the company? Or should we look for an outside source of money, like bank loan, for example? It's an open question. It's an open question how to finance this expenditure. Again, very important thing is we are the airline and we put our tickets to our sales agents, right? So they collect money for us, but then we should collect money from them. Are we able to do it? Do we know exactly how to do it? Because the collection of money is still a very, very important factor. It's a very important factor how you collect money to be sure that somebody that owe you money really is going to pay your own money, in effect. So there are like various aspects of financial management. And we could speak about this later. Now, quite an important slide, this one. Surely, some of you are scared of mathematics, and this very nice face shows when you are called in math and you were not paying the attention for the last 15 minutes. I hope you pay attention to my lecture and you are following it all the time. So it's not enough to be scared of mathematics. There's another science that may be very scary: accountancy. Again, I'm not here for accountancy. I'm here for finance. It's a different story. Finance people use some data that comes from accountancy. Accountants prepare the data. They analyze, they sort it up in a way that finance people could use them. So we have to know, because probably later we'll return to it, but I just want to red mark this, that there are three very important documents in accountancy, fundamental ones. I would even say that two first, number 1 and 2, are the most important. Number 3 is sort of different story, but first two are really important. One is something called balance sheet. You might know what it is. I will just say that it shows the value of companies' assets and liabilities on a particular time, because it's done on a date, on specific date. Very often it's 21st of December of a given calendar year, very often, or the most often, and it's just like a snapshot of the situation of the company on this given day. Then there is an income statement or profit and loss account. It has different names in different legal regulations. Profit and loss account, income statement. But it shows revenues, sales, expenses, and the profit at the very end of the company over a period of time. This is very important. This is for a period of time. So this is like for whole calendar year, from the 1st of January till the 31st of December. It's like a video recording of a certain period of time. So it covers a period. This is very important. And then there is a statement of cash flow that shows cash receipts and cash payments, because in accountancy something might be assumed without really the movement of cash, and it's very important. So this is again the third document. Then another lick of some fundamentals from accountancy. It's like assets of the company equal liabilities and equity. Equity is generally what the company owns. It's money put by investors and some retain profits. This is the company's money. Liabilities, it's what company would say borrow from other places, or is liable to pay. Then another brief fundamentals. There are some statements. So we say, like, we have current assets and non-current assets, like fixed assets. This is very important in way of thinking and financing the company, because fixed asset is something tangible, like building, machinery, and this involves normally a very long time of financing. Like you have to accumulate money or borrow for a long time. Current asset is something more related with something that is less than a year. It's like product, it's stock, it's cash. On accountancy lectures you will know more about that, but I just red point or flag this. Then you have this brief summary of liabilities. So again, they're like long term, and they're like loans to the banks, and then they're like current ones, like your partners in the business or tax, right? We'll not stop too long about that. Then we have the decisions in finance, like investing decision. It's something that is strongly related to an asset, right? So when you buy something for a long time, it's an investment decision. But again, financing decision, like on flow, is something how you structure your business, or how you pay your liabilities, or how you collect money, anything related with that. I just pointed some areas that you should like focus your attention on in other lectures in order to follow my lectures. And then we come to this point, which I will sort of summarize just before our break today. Now we start our financial management lectures. Time is money. Time is money. Just it's very important when money comes, when is it spent, when is it promised, what risks are involved with that.